Milk Metaverse is a metaverse platform for the media industry that will bridge the gap between the content producers and the audience. Mediaverse from Milk Platform will be a combination of virtual reality, blockchain technology, and artificial intelligence. Visit the website metaverse.milk.global.
Welcome, Adrian. Duncha CryptoBird back to you from Free Trading Congress. Day 5 is actually coming to an end right within this show. This is the last show for today for 5 actual consecutive days that this entire Free Trading Congress has been going. And I've got for you a very interesting topic because I'm going to talk how I'm actually eyeing to prepare for 2023 crypto breakouts. But before I do, I'll hold you there for a second and I'll join back right in the moment. Welcome back, agents. Don't to CryptoBird again. Free Trading Congress is all about providing value free of any charge for 7 or even more days with an immense exclusive experience for what it feels as well to be a full proper membership owner in the Bird Nest areas on a daily basis. This has been pretty wild couple of days. So much interesting content is basically being shared on a single basis daily. With you here, and well, let me know, guys, how you're doing today, right? Because with some of you, I'm going to hear you probably first time. There is Nuno and good and the chat. Good, welcome. Talking about overall preparing for 2023 crypto breakouts, I've got for you a couple of good points to note, and let me bring it real quick for you. To start with, I dropped this tweet yesterday about the short PDF, 8-9 page PDF that I actually got ready for everybody who lost an FTX. This is true, right? I've made it live. I've made it go public. It's accessible. You can download it at any time and go at theburbness.com. If you go at theburbness.com, this is what's going to give you the free page, free 9 page alpha, basically sharing 100% nothing but straight content for trading on how to actually turn absolute worst investment mistakes into profitable trading strategy in under 30 days. That's it. And 30 days, another 30 days, I've properly kind of like managed to create this walkthrough with a 30-day plan for everybody to get their chances basically back to recover, to stand there on the feet, stand there back on the feet after losing so much on Terra, on Luna, on FTX. If the Terra Luna wasn't enough, then FTX came in to the rescue, right? This has been a very difficult year for so many traders, and this is my answer on actually helping them for free, right? And if you go to theburbness.com, this is what you're going to have. And well, we've been featured in New York Times, Forbes, like Bloomberg, all of those pieces. And this is a free PDF, no charge whatsoever, the only thing is that we have to know whom to actually just give it. So feel free to drop your email, feel free to drop a name, and you're going to get it for free. How to turn absolute worst investing mistakes into profitable trading strategy in under 30 days. This is a 30-day step-by-step walkthrough plan for everybody, accessible. This is pretty cool. And well, sometime in the future we may take it off the website. So well, that's why I'm saying it's limited. So feel free to rush over and actually get your free copy now. This is it. Okay, pinky promise. This is free. You're not going to be charged any single peso for it. So rallying actually again and answering the community needs and having so many great questions and comments actually again. That's my way of helping and giving back. Aside and outside of what I have for you on the pure live chart analysis, right? Because preparing for 2023, we'll have to develop and then take it from 2 presentations that I brought for you. Okay, so this is going to be a little bit longer webinar session today. Typically, I would hold them for about 30 minutes recently, but to appreciate everybody that is here with us, I definitely want to again convey a little bit of better chances to understand also what's happening on the shorter term timeframes and locally in the markets, right? So before jumping and projecting 2023, I'm inviting you to go and participate and learn a little bit about what's happening right now. Okay, Dow Jones Industrials. The markets are not closed today. Okay, they're operating a little bit earlier, I think, but they're not closed. Dow Jones is breaking over 34,300, right? 34,300 is breaking over the past August highs, over the bear market rally. It's breaking. Okay, it's showing significant technical strength. It's pressing higher. It's following through. This is a very significant and measurable, again, pressure strength, right? To be accounted for. This is not something you want to counter trade most of the time because trends tend to persist, right? So once the market catches on fire, it gets on the track. It tends to follow this track for longer, much more longer than shorter, right? So it has much better chances to continue and persist in this direction than to reverse at any time. So if you're trying to again swim against the river stream, you can do it for a minute or two. You can get lucky once, twice, or 5 times. But it's impossible to get lucky and swim against the river stream for your entire life, right? It's not impossible. It's not possible to keep concentrating the trend and be profitable on that. Hope it makes sense. So having this significant technical strength for the first time with an actual follow through, a little bit of a rejection of the bear market trend, this red curve, ladies and gentlemen, this the bear market trend, and this bear market trend has started flattening out. It's definitely decreased its angle, its aggression of decline, and it's actually switching its mode a little bit, right? You can tell that, I think, right? It's been very consecutively and very substantially declining, descending for the whole of the year until this very recent breakout came in, showing significant strength for the first time with a persistence higher. This is a promising sign, ladies and gentlemen. This is the first promising sign out of this entire almost 12 months it will have soon become, right? The composite index is lagging. The composites are lagging, right? The tech industry overall here, it's not perfectly catching up. It's underperforming. The S&P 500 here is actually close to the breakout, also right under 200-day mean. So it's lagging behind the Dow Jones Industrials. So what it's telling me again that because both tend to move in the same directions, there's a chance that S&P 500 is going to like to catch up, with the S&P 500. So with the industrials, with Dow Jones Industrials, both move in tandem. So if you can tell, again, remember the place where it is over the 200-day average for Dow Jones Industrials and S&P 500, right? So Dow Jones Industrials is somewhere over here. It's actually breaking over the August highs, right? So Dow Jones Industrials is here, is somewhere here. So similar path should be conveyed and actually approached by the S&P 500 as well, the largest 500 caps. What about German DAX composite? It's also breaking to the upside finally and significantly within a similar manner, very strong pressure and pushing higher. You can tell, and maybe if you look closer, you're going to face on half this, what many people could refer to as this rising wedge pattern that is actually broken to the upside right now. Is being broken to the upside like we see. And typically when the rising wedge pattern comes up, when there's like this congestion, there's like this distribution process that is inclining, then when you see the first kind of like tilt higher, this tends to trigger a lot of stop losses that are hiding up here. And those stop losses need to buy back higher, empowering this entire rally, which kind of like commits to this short squeeze. Okay, so it's overall bullish. Dow Jones again, composite, transportation, also looking fairly good over 200-day trends. This is first situation this year that the trends are looking good for the stocks. Okay, and the energy though remains very high, with a little bit of a sideways period, with reminding me of distribution. You can tell there is a lot of those tiny little gaps, and as long as those gaps keep popping up, I would refer to them as exhaustion gaps. Those typically happen in some distribution patterns. So what it means is that when the market presses higher and eventually kind of like, the trend pace momentum slows down, you start switching the mode to kind of like move a little bit more aggressive within still same, big strengths, big forces playing in the field. But this time, again, there's like this equilibrium, right? The market stops pressing higher and it switches into this equilibrium, and it bounces off the lows and rejects the highs. And this is a battle of bears on top and the bulls on the bottom, right? And when it happens, you typically see those again within the volatility in the stocks. You see a lot of those kind of like movements that tend to be gapped, that tend to have those open windows. And those gaps, first of all, tend to get filled because of self-fulfilling prophecy, but also because of its volatility. So when there's a lot of volatility, the gap is going to get closed almost randomly, okay, because of noise. So I would refrain to it as and refer to it as a potential distribution pattern. The signal I want to see is a proper close below the 20-day trend, and when that happens, in my opinion, we may see energy prices kind of like decline a little bit towards the medium-term trend, which aligns to be the prior resistance area for August. Okay, it would make a lot of sense, this confluential area. Let me know, guys, if it makes sense for what I'm sharing right now. All the best love to Erika. This is highly appreciated. Much loves. Siron just like reset right before the session on the stream of Razorn. You don't miss, buddy. Well done. Congratulations. Loving this week. Nuno as well is here. All the good legends are here. If you have any questions, drop them and I'll try my best to answer. And if we go further and deeper down the rabbit hole, what you're going to have is the bond prices which are not moving. You can tell the magnitude of the underperformance as well on the Bitcoin. If you remember, again, against the 200-day trend, this is the same 200-day average that you were looking at the Dow Jones or S&P 500. S&P 500 is right here, right? It's right below its 200-day mean. The Dow Jones is right here, right? It's over. It's way above the August highs. So I would argue that Bitcoin is completely on the other side of the curve. So this definitely confirms a lot of underperformance, a lot of relative weakness, just as you perhaps have taken away from this amazing stream and session from Julius De Campanauer, the creator and author of the RRG charts. I'm going to use them in a second. Volar is again not really. It's stalling, of course, today, but it's not looking strong. There was a lot of rejection, like I mentioned yesterday. There was a lot of 20-day rejection, a lot of weakness, and this pattern more likely looks like it's going to refrain and even tag lower. So dollar is definitely following a sharp short-term rejection, short-term reversal. We knew that. I was warning about that when there was like this descending triangle kind of like pattern coming up within this distribution form. We also have very low implied volatility index, right? So depending on the actual fear and the ratio of the S&P 500 put options, to the calls, you can kind of like try to again gauge on it just based on the put and call ratio, right? That if it's high but not so high, then puts are basically representing a little bit of a fear because they assume they are give you the right but not an obligation to bet on a decline on the stock. So it works a little bit like an insurance. But here for the volatility index, it bases its indications on implied volatility of what traders think of the volatility to be ahead 30 days, right? So they are pricing in future volatility based on their expectations and the amount of actual put options. And the bigger the fear, the bigger the fear, the higher the VIX, right? And the higher the VIX, the bigger the fear, the more the puts there are pushed, right? So traders in the elevated fear actually tend to insure themselves with puts, and when there's a lot of puts versus the calls in the option markets, you can tell that there is a lot of elevated fear, and typically it can work a little bit like a market barometer because traders tend to price in 30 days ahead that they expect some negative resolutions. So that hopefully makes sense because right now, looking at the low levels, this tells me that traders are inversely saying that, right? They are not expecting a lot of fear. They're not expecting a lot of negative situation for the market. In fact, they are very peaceful. The fear is low. This is the fear index, what we know it as well. Okay, volatility, implied volatility. So the energy, I've mentioned about the energy. And here on top also, after having this session on relative strength, you're looking at this upper side of the chart, which represents the relative strength against S&P 500. So again, you can tell that Well, first of all, it's in a strong uptrend, right? The prices are moving up, but it's also moving up against S&P 500. So even if S&P 500 moves a lot, then for most of the time and this year, there was a strong relative uptrend as the energy was outperforming S&P 500. And it makes sense. And it does make sense, right? Because you can see all of the outperformance and distinct leadership coming from the energy sector, which is the sole rider. I mentioned that recently. The sole rider, very distinct and a well-defined leadership on the stock side from the S&P 500. So what it does, it means that it takes a lot of money out of your pockets because of high inflation, because of recession, okay, and also because of high energy prices, which works like a hidden tax because it leaves less disposable income on your hands, and it definitely does not work so well for the risk assets, right? So having just a little bit of this analysis where Bitcoin is also fully dependent upon S&P 500, but on an inverse relationship, right? There is a strong negative correlation coefficient, which on a 7-week basis recently says that Bitcoin will move more likely than not, and like adversely and negatively against S&P 500. So if S&P 500 moves up, the Bitcoin is supposed to go down more likely than not. This is all game of probabilities, no certainties. Okay, so we are on the negative side of this chart pattern, of course, right? We've seen this major breach of 17,500 and this descending triangle pattern kind of like, again, breaking. This is not something that puts too much optimism, that should put too much optimism in your veins, I think. Overall, as long as we stay up here, or down here, I would argue this is not good position. We know that, again, it's underperforming heavily against the S&P 500. All right, and it's not a good candidate for the pump, basically, because those trends tend to persist. So speaking of this, again, we are expecting a lot of breakouts, right? We've seen a lot of those tiny little patterns breaking out. We've seen this pennant kind of like failure on the bottom, right? This pennant, which kind of like came after the breakout to the downside through 17,500 level. It started consolidating, market started consolidating a little bit. It formed this triangular shape, this geometrical shape of a triangle up there. And this typical formation of a Hasma formation basically gives you the point that this is a little bit of a measured move, some midway on the way down. That's the way you read a pennant in situations like that. However, we've seen this fake breakout to the downside. The market actually just, proposes whipsaw that got many people out of the market on stopped out. Okay, many longs stopped out. You trigger the stops and it rally back again, back higher. So if it does so, again, the chances are that this is the failed pattern, and the failed patterns tend to perform better in the opposite direction. Why is that? Well, it's very easy, because if you break your support and then you rally it back, then there's a lot of underwater traders, right? So they have a choice. Either they let the losers get bigger because the market is looking much stronger than it looked a couple of moments ago, right? And if you decide to close it out of your fear of being wrong, then what you do is, well, you have to take counter position, which means that you have to buy it back. So it adds to the demand pressure and elevates the prices even higher, right? So which even causes this, again, self-promoting loop that even more traders are underwater, and even more of them will want to aggressively buy and buy back at any cost, elevating the prices higher and higher, which is why the failed patterns to the downside tend to perform better to the upside after they get entrapped, and the top patterns, okay, after getting a front run up here, tend to rally basically also in the opposite direction, right? So breaking the resistance but faking it out, though, okay, faking it out also kind of like brings a lot of similarities to like a head and shoulders pattern with the left shoulder, head, and the right shoulder up here. But overall, again, this head and shoulders is just an example for what this overthrow on peak means, right? So this is an overthrow. This is the fake breakout, and those fake breakouts tend to perform better in the opposite direction, like we mentioned. Okay, does it make sense so far? Consistency, yes, consistency. Much love to the risk taker as well. This is pretty cool to have you here with me. I'll have a couple of points. Like I said, I want to talk to you guys right now about how to prepare for 2023 breakouts. It should be obvious, but it's not. Okay. So to prepare for 2022 breakouts, you'll first have to realize again what's been going on this year, right? So this year, the reality was that we were talking about very, very high inflation in states and OECD, you know, very high inflation, almost double-digit inflation in some other countries, double-digit inflation. U.S. almost 9%. Right now, it's started coming off, of course, which is more positive than not. However, we're still talking about the strong trend on the core inflation, which is less food and energy. This is not promising overall. So high inflation, we're talking about a recession coming from the oil spikes and the high energy prices, like I said, and high interest rates. The 10-year yields interest rates have broke over 42-year long trend, 42 years of trend, right? 42 years, 90-80. This has been the trend. This has been the trend that was not broken until this year. So this is you only in the last 40 couple of years. This is such a situation you've only seen once. This is the reality. And to answer how to prepare for breakouts in 2023, you have to understand well that 2022 has to be accounted for, right? And if we want to translate and transfer our wealth through the boundary of 2022 and 2023, you have to again acknowledge for what's been going on, the main dominant trends this year, because the trend is your friend, right? Don't find the trend. Like I said, you don't have too much of a choice to swim against the river stream because it's just going to wash you away. So follow the trends, right? This is the main narrative. So again, what trends have we seen this year, right? Well, capital preservation is what we've seen. This is the keynote, by the way, presentation I shared in Berlin as well yesterday online. So you can watch it here right now as well. Capital preservation, right? So staying in this capital preservation defensive mode has been the dominant tendency this year, and dominant trends, like I said, they tend to persist. So you have much better chances that those trends will tend to persist than to reverse. So it makes sense to stick with it, okay? And this dominance and tendency has been coming from and with sticking to the stables. Okay, so basically selling of Bitcoin at the peak would have gained you a 74% relative gain against Bitcoin, right? So I think it makes sense. Dollar strong, seasonal trends definitely need to be accounted for, right? So Bitcoin seasonality, if you look at it this way, it favors the for quarter four. Ever since having September as the bottoming kind of like a month of the year, most likely the only negative month or one of the very few negative months on average for Bitcoin over the last 10 years, then this historical seasonal average actually tells you it's detrended. So it's not showing kind of like trends, but it's just showing you those typical expectations for what over the 10 last years, the trends, the patterns have been for the seasonality. So we can tell there was a lot of the market elevates typically towards the end of a year, then it stalls a little bit. And in January through February, it declines. So entire January, you can expect, on average, on the past 10-year basis, that the market is more likely to decline than to incline. Okay. However, like I said, towards the end of the year, you would be looking at it moves up on average. However, this doesn't mean it's going to be guaranteed. It doesn't mean you should take it for granted. It means that there is this general tendency for Bitcoin overall that it more likely closes positively towards the end of the year. However, it does not include for situations like FTX or Terra or Luna crash, right? It doesn't give you such insights. But anyway, let me know real quick if you guys can hear me still. Let me just grab a sip of a coffee and let me know if what I'm saying it makes sense and if you can still follow, hear me clearly. I'm pretty sure it's going to take a couple of seconds. There's always like 5-10 seconds of delay. So just wait. Paul Byford saying good. Uriel saying yes. Yes, yep, 100. Okay, cool. Fair enough. Let's rock on. Okay, so again, we are talking about this capital preservation, the seasonal trends, right? And searching for outliers. This is what typically again helps us improve the profitability if we follow the trends, if we add in the seasonal patterns to it, and if we search for outliers, which is those coins, those assets which perform better than the others. We can filter them by the breadth. The market breadth shows you again how bullish or bearish overall of the market is. You can tell that by checking the percentage of cryptos over specific moving average. So there is, till a couple of days ago, there was only 5% of all the crypto coins out of the entire universe of cryptocurrencies that were trading over the 200-day trends, which represents the bear market, which represents, sorry, the primary trend. Okay, so the 200-day trend, which is this long-term trend, tells you that if there is 5% of the coins trading above their 200-day average, this would mean that they are most likely in their own bull market, or that they are not in the bear market at least. Okay, so by tracking that, again, you know that those 5% of the coins that are versus position versus in front of 95% of all the coins that are losing and against 200-day average, right? This makes it an outlier. Those are outliers. Those are that perform better than the rest of the market. But you can tell that the overall breadth of the market is not good, right? It's not good because otherwise, in the bull market, you would have it completely inversely. There would be 95% of the coins that would be trading above their moving averages, and some of the coins that were outliers in negative matter of it. Okay, so here you're looking again at the crypto breadth, which is definitely bearish, right? But you still can take and try to search for those that are outliers that are giving much better returns than the rest of the market. So by focusing on this limited tiny sample of 5% of crypto coins in total, you can gauge on which coins to pick, and you can search them typically, within gaming, within NFTs, within metaverse. Those are the ones that have been staying fairly strong. Um, the one of my reports, one of my keynotes again was focusing on the gaming and metaverse, and you could tell that there was this fairly again flattening out trend for the growth of the user growth, basically, right? So the trends were flattening out, right? The trend is not declining anymore. It's kind of like flattened out. So this tells me again that relatively, if the crypto Bitcoin is going down, is going south, and in clear downwards trend, clear bear market, then you see some inclines in the new users, an average number of users either increases or it stalls, then this means it's already outperforming Bitcoin, and it's outperforming the main dominant tendency. So this is likely becoming an outlier. But speaking of technical approach to it, right? How to prepare for crypto breakouts for 2023? Well, I would suggest that you want to understand what the breakouts are first, right? So let's make an experiment. Let's make it a little bit more interactive. So speaking of breakouts, to all the viewers and listeners, I would like you guys to again to participate in this experiment. Let's try to define what the breakout means. I would like you guys to put in the chat your own understanding of what the technical breakout is, your own definition. Let's try to see again what you guys think. I'm going to try to comment on that constructively. Don't worry, and you're definitely going to be um, recognized for it. So let me just wait a couple of seconds until the answers start coming up. The question is, what is a breakout? How can you define a breakout? In the meantime of waiting, I just want to remind that this is all a part of 7-day free trading congress. Okay, first answer, Nuno. A reverse of the trend breaking support or resistance. Okay, Okay. 3-day chart when MA50 crosses 200-day, my version. Fair enough, Uriel. Bullish retest of 200 MA. Spraffers. If the price level comes out of trend and forms a new pattern. Okay. Thanks, Burp. You're welcome. Aranya 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. So all of those answers are true to an extent, to set an extent. Because we are talking about general outlook and generic approach to the breakouts, okay, then we should definitely account for the most basic definitions, right? So try to make it as simple as possible, right? We have JC commenting when a resistance is broken, retested, and creates a new creates a higher low. Okay. Imbalance from Paul Byford. Damiano, breakout of previous low or high. That's it. I think this answer is actually closest to the true meaning of it, right? So breakout, if you think about that, is an outbreak. This means that there is break outside the previous zone, outside a previous level. Okay, it breaks outside either to the upside or to the downside through certain or over certain boundary, certain level, trend line, pattern. Okay, most likely, again, you take the respected highs or lows, let's say yearly highs, right, or all-time highs, or the highs that are significantly important because there was a swing kind of like on the market in that time, right? So breakout. let me show it to you. Hopefully, up here. Let's take it as an example. So breakout is a situation where you would measure again some recognized significant swing in the market, right? How many of those we have? We have this one, this one. Let's take the major ones, okay? The biggest extremes. So let's take the all-time highs. Let's take the January's lows. Let's take the highs of March, lows of June. Okay, then this is the highest peak Bitcoin has made recently. So those are all the breakout. Those are all the significant anchors, some strong swing levels. And any break to a new level outside of those levels, okay, can be considered a breakout. So you have this peak. So any break over $25,000, basically price breaking this point is going to be considered a breakout. Okay, any point, any breakout to the downside, breaking below the June's record, is considered the new breakout, right? This is with the moment where the price breaks in either direction, certain price barrier, okay, moving in the upwards or in the southward directions. So this is the very definition, right? This is the price break. So this is what means basically that price breaks to new levels. Okay, we've seen it very well with the dollar. We've seen it with the dollar, when the dollar was breaking over this major 7-year resistance, right? From 2015 up there, up to 2022, dollar was staying in this flat horizontal trading range bound movement, this rectangle or box, if you will, right? There are many names for it, but it only broke out to the upside, okay, in a very significant period of time there, right? It hadn't happened until, basically ever since the dot-com bubble. So the bigger the distance, the bigger the importance is, the bigger the time frame, the more relevant that the breakout is going to be. Okay, and just by the way, I'm talking about the breakouts and how to prepare for 2023 crypto breakouts because this is the way to make the most amount of money in crypto. Crypto markets are trending very strongly. Bitcoin is trading very strongly to the downside this year. But when it's a bull market, it tends to persist and continues to persist, and it moves higher and higher and higher and higher. Right? This is what defines a trending market. Most of the times, certain stocks are full of noise, so they will move sideways. They will move, up and down, and not much kind of like consistency. But Bitcoin and other cryptocurrencies, when they catch on the track, when they get on the track, they stay in there and they move up and higher and more aggressively. And reversely, in the bear market, they move lower and lower and lower and lower and lower. Those are very trending conditions. You can easily position yourself against those conditions, or I should say, use those conditions in your favor, right? So you know when there is a primary upwards trend and that things are going good, you know that crypto has this specifically good chance, a node, that it's going to continue this way. And reversely, when you see a proper bear market, right, and you see it makes lower lows and lower highs all the time, and it keeps breaking out to the downside, basically violating all the supports more often than not, okay, then um, then you can position yourself in this capital preservation mode, right? And if you even if you sell, you don't need to be short. You don't need to short sell contracts, right? You don't need to buy derivatives. It's enough if you just go and withdraw money and go fiat or go stables, right? Maybe stables are also bearing risk. Fiat is also bearing risk. In the traditional finance, in those theoretical finance, for the Markowitz portfolio, for instance, um, for capital assets, for instance, kind of like trying to price them, measure them. I think that there is this main assumption again that the markets are efficient, but they are not, right? They are not efficient. They tend to move very aggressively at times. Most of the time they're going to move sideways, but when they catch on track, they're going to move very aggressively in these self-promoting loops, these positive feedback loops, right? Where there would be a lot of FOMO pressing higher. And instead of against any rational, traders would, in the rational world, efficient markets, people would think, okay, this shit is overpriced. I'm not going to pay for this. But the reality is that, you're related to your fellows, to your peers. And there is this peer pressure, and you're looking, oh, all my friends are buying, so I better buy too. It doesn't bring any rational to the game. It only has this emotional influence and impact, right? That typically makes you make wrong decisions and deceive you. So cryptos are exceptionally well trending markets, and those trending markets, when you combine this with breakouts, those tend to be the best performers. So John Hill and George Pruitt actually, they tested the variety of baskets of different trading systems for profitability, for robustness, which is reliability, the stability, sustainability, and they found that the best systems, the ones that perform the best, but offer the lowest win rate at the same time, are trend following breakout systems. So when you combine those strong trends, when they happen, you measure and you let them drive, you let them ride. Okay, so your job for the 2023 is to try to find those trends, recognize those trends, and position yourself in the direction of those trends, not against it. And when you additionally see and wait for the breakout, when you see and let the trend develop, right, you see there is this consecutive sequence of higher highs and higher lows, and then it finally breaks out to the new level. This is where you want to buy, typically as a trend follower on the breakouts. And by getting those breakouts and knowing that those trends tend to be self-promoting, then you have much better chances to experience an upwards rally, and those markets are going to give you and profit you with those exceptionally long tails in the profit distribution. Right, so we have a couple of different ways how to recognize the patterns. Again, quick check if you're still with me, if you're following, if you can still hear me. Let's see. As in, all orders are filled at an order block. If they are filled, then there is this equilibrium, but there's, because markets are constant, at least for crypto, this is free market. You're not kind of like waiting for everybody to drop their orders at the same time. So the chances that the market is going to have no orders is means illiquid is not so popular within Bitcoin, right? So you wouldn't really see that. What's your take on current macroeconomics with Bitcoin at these low prices? Do you see an impact of miners shutting down and having an impact on price? Yes. I do think that high energy prices overall, again, increase the production cost, the mining costs, right? This is not good for miners overall on its own. Then you add Bitcoin prices, which are low, which means that the profitability for the miners is in danger. Right now, if you look at it, let me see if they actually it's going to come up. Right, the average mining cost right now for the miners is of $21,000. This is the average mining cost, right? It's kind of like increased a little bit, but it means that the mining difficulty increased, that the network congestion kind of like stepped in. But here, the price of Bitcoin is again close to 16,500, so there is like this $5,000 gap. It means that the miners are heavily underwater. And what happens with the business if it runs underwater for a long period of time? Well, it's in danger of closing, of collapsing, right? So what happens if the miners collapse? Well, they have to cover for their losses. They have to withdraw and sell for the rescue. So it means that they sell their assets, Bitcoin, which adds a lot of supply pressures, which basically makes sell-off on the market. So I do believe that with high energy prices, with high inflation, with high interest rates, there is less liquidity, of course, as the balance sheet is reduced on the Fed side. This promotes overall risk of environment, and people are withdrawing money from the financial markets. Yeah. So this definitely is again not adding any positives to the miners. I would argue that this actually brings negative consequences. So the longer the Bitcoin stays at those low levels, this is going to eventually force those miners to close, right? Their mining businesses. Because for how long can you eventually run your unprofitable business, right? You can maybe do it for a couple of months, right? But if the production costs are very high and you're underwater, you're getting so much less than you're paying, then eventually you'll have to shut it down. And when you do so, okay, you have to sell off what you've got just to cover for your losses. So we've seen it in 2018, and for Bitcoin staying at these low prices at 16,500, I would argue it's very dangerous. It's very dangerous because eventually it may mean that not only this technical pressure is on Bitcoin chart, right? Not only this technical kind of like again subjective traders' perspective is that it's bearish. Not only the trend is strongly defined to the downside, but it also brings this chance that the longer the market stays up here, like in the very low levels, that the miners are going to have increasingly more chances of a sell-off, increasingly bigger harm to their business. So they are going to get closer and closer to their shutting off, basically shutting down. And if that happens, they'll have to sell off. When what happens if you sell off a lot of Bitcoins? Well, you're basically dragging the portfolio or dragging the prices down, right? So then sudden stops get triggered, and this can create a self-promoting again capitulation, right? When you have a lot of sideways movement. Right now, Bitcoin is hanging on its cliff, like hanging on the cliff. We are right there, below the major support that had been held for a couple of months, for almost half a year, and it's just been broken, right? So there is this significant way that traders would eye and search for the patterns and for the distribution and for the targets lower because of a downwards breakdown. So it makes already automatically traders look down, and the technical look down target is at $12,000 for this pattern, right? So again, there's a lot of supply pressure, there's a lot of risk and tension coming on the side of the miners, which may mean that eventually they're going to have to sell off, right? And if they do, they break major supports, which triggers stop losses and makes people panic sell, which promotes the sell-off even more. So it may happen that you're going to have this liquidation cascades, just like we've seen during the COVID or miners capitulation in 2018. Hope it makes sense. Yeah. So finally, back to my point about the breakouts, right? Because again, following the trend and positioning yourself in the direction of those trends for 2023. I'm not going to tell you what the trends are going to be because nobody knows that. Nobody knows. Perhaps there is war expansion and we all die. I don't know that, right? I just pray to God every day that it's not the case. But there is no guarantee. I don't know what's going to happen tomorrow, right? Nobody knows that. No Bitcoin chart is going to tell you when there is war extension or something. But speaking of, again, of the financial terms here, you can recognize the breakouts and position yourself in the direction of those breakouts, right? Based on percentage filter, which means that if there is certain level, right? Let's say the market moves sideways, and you know that you only want to see the breakouts that are valid, not the ones that kind of like just are there at the resistance, but it kind of like swing back and forth with a lot of noise. So you want to eliminate the noise, and in order to eliminate the noise, you apply the percentage filter. So we can validate and confirm the breakout based on the percentage. So only after, let's say, moves up 5%, right? This is your point of interest. After it moves 5%, this is where you would consider the breakout valid, right? And this is the confirmation for the breakout. So percentage filter. Then you would often want to see volume breakouts, right? So the breakouts confirmed by the volume. Let's see. Let's give the volume up here. Right, for this one. So you typically see that the breakouts that happen on increased volume typically tend to get valid or more valid than not. It's an additional kind of like, again, like this for this Netflix chart. It's considered good to have, but it's not obligatory. So if you see a volume spike just like here on this double bottom confirmation from Netflix chart, right? Or if you see this again, the volume spike here that clearly stands out, this is the clear volume outlier, okay, often on the breakaway gaps, then this is what additionally validates the breakout. This volume spike tells me that this breakout is confirmed. Okay, so this is another way of confirming the breakout. Besides, you're looking at standard deviation. So in terms of like how much deviation, what is the actual volatility change, right? So we can measure this based on, well, either derivative tools, just like Bollinger Bands, right? Because when the Bollinger Bands work in a way that when you have this main median, this medium, the short-term moving average, this 20-day average, right? It tends to show you the two standard deviations to the upside and two standard deviations to the downside against the mean, right? So that you cover, in the ideal terms, about 95% of the cases that whatever happens, let's say, let's put a different color, whatever happens up here, right, within those bands, those Bollinger Bands, this covers basically 95% of the price action whenever there is no significant breakout. So the efficient markets are going to move up in this kind of like a stable manner. But at times, like I said, the markets like to break and push very strongly to the upside or to the downside. But it means that, again, if you apply the standard deviation measures, then when there is a significant breakout, this volatility is going to increase, right? So the Bollinger Bands are going to go wider, are going to widen. So you can apply standard deviation as well. And if there is this significant burst on the standard deviation side, right, then this is what can validate a breakout as well. Time filter, very simply, if there is a weekly or daily close outside the specific level, right? So if there is a price breakout that moves up and it stays there, not kind of like reverts back on the next minute, but it stays there for a day, for a week, or for a month, this is a time confirmation, right? This is why you like watching, and you should watch the daily close, the weekly close, the monthly close, because those kind of like print in and embed this significant confirmation that, okay, the market printed itself. It has its own footprint at this specific level, and it's valid, and it stayed there. It's not an accident. It's not a coincidence, right? And finally, volatility on its own, right? So we have indicators just like ATR, right? ATR, which stands for average true range. So ATR basically takes the highest of the three different variations. If you have the range of price action, basically, so we would take the highest point and the lowest point overall of the entire distribution. So you take the highest point and the lowest point, kind of like and measure this range based on that. So the difference is going to be the measure, right? How much different this is, then the bigger the difference is, the bigger the volatility, right? So such patterns are going to have less ATR between the high and the low, and such patterns are going to have much more ATR. They're going to be much more volatile. This is the way of technical confirmation that if you see this volatility burst, right, then this is more valid. This is what I use also up here. So if you go to the lower time frames, okay, and if you see those breakouts, let's say to the downside, this dotted curve, let me get it bigger for you. And this dotted curve stands for the ATR. Okay, this is exactly a 14 period ATR, even if we take it for the day, let's say here, right? So what it tells me that this downside breakout, basically coming off $20,000, was confirmed is that the ATR broke outside its own moving average, right? So there was like this significant burst in the direction of there was the significant burst on the volatility side. So the volatility, again, the range, the range of those changes, the changes came from very, very narrow kind of like movements, very narrow patterns, those tiny little distances, to such big, mass. So when that happens, you know that there is a lot of boiling in the market. There's a lot of credibility in the breakout. So this is how I kind of like knew that this breakout from $20,000, which was the last time where I got stopped out of my buy position, this break outside of regular volatility and the significant burst, right? You can tell that there was very, very significant burst, right? Just observe this, right? You are talking about here moving sideways and then boom, right? Once again, this local sideways and boom, this is where it stops. This is the spike on the volatility, and this validates a breakout. And this came with the breakout below $20,000. So I hope it makes sense. So you add either the percentage filter or volume filter or standard deviation or time filter or volatility, or maybe all of them together, but you're going to have fewer signals. They're going to be much more credible, but you're going to have fewer signals. And credibility, as in the success rate, is not as much important as the mixture of the win rate and the profitability, how much you can gain versus how often you can gain it, right? You cannot gain high rewards very often. You can get moderate rewards very often because those are the most typical ones. Those are the average ones. But if you go for the highest rewards, you're going to have very few opportunities for it, right? So there are so many other points, guys, that I wanted to mention, but this is, again, we're going to start to have to wrap shortly, and I've got one more message, one more news before we disconnect. So let me wrap it, right? Preparing for 2023 definitely needs to come with acknowledging for what 2022 has stood for the entire year. We were talking about, again, the recession. We were talking about high interest rates, about high energy prices, about Fed reducing the balance sheet, selling off bonds decreasing in prices, pushing up yields, which withdraws money from the risk assets. Okay, so stocks most of the time had been performing poorly. However, they started performing well. Cryptocurrencies are definitely adversely moving and underperforming against the S&P 500. It's also seen in the visible in this RRG chart, right? When there is this pretty cool sector rotation, just like Julius the Campanauer said, and the market rotates, and here is on the 5-week basis, kind of like you can tell how the market travels, right? You can tell that there is this circular kind of like rotation somewhere around the medium, the benchmark point of S&P 500. So all that is to say that, again, Bitcoin is a heavy outlier. It's a heavy outlier in terms of the negative momentum, or should I say negative movement against S&P 500. It's moving relatively in a downwards trend, and those heavy outliers will tend to continue to underperform in those terms. So we are entering 2023 with high energy prices, with high interest rate yields, with stocks looking just a little bit better and probably stopping the bear market on their own. Then typically would have about 6 to 9 months on average ever since bottoming out. So bottoming out in October, okay, kind of like puts you somewhere Q1 through Q2 for the recession to kind of like maybe end, or maybe not so much of an end, but when the bull market is truly kind of like confirmed and established and validated by the economy, right? You really want to have that in mind and keep that in mind as we go, right? Because the dominant trends for the capital preservation are still not finished. You have to acknowledge for this, and those trends will tend to persist. So you have better odds at sticking to this until, most likely, like I mentioned yesterday, one of the main buyback points is going to be Fed starting to cut rates again, right? If they do, then this is likely what it means, that inflation had come off already, that the recession is would soon to be ended, and this would ignite another leg of the bull market, in my opinion. Stocks are looking fine. Bitcoin is underperforming, so take it all with a grain of salt. It can change at any time, of course. Geopolitical risks and tensions are not off the table. We are not out of the woods by no means, by any means. Uriel is saying, thanks, Adrian. Many blessings. How much you give here. May all blessings grow beyond their comfort zones. Much love to you, Uriel. Thank you so much, and blessings. God bless you. Again. Devon saying, war coming into Asia 2023 still bearish. Might be so. You never know, like I said. But what we know is that those trends that are existing right now, they're more likely to continue than to reverse. Volatility is direction neutral. Take that into consideration. Yeah, on its own, it's yes. On its own, of course, it is. On its own, it is. Very, very well stated. Yeah, very good point. Ooh, Devon saying GDP will surpass USA. The Asian. If we continue this, Pentagon will let that happen. Well, we'll see. We'll see. Hope for the best. Paul says, for potential return when the market reverses, do the stats show the assets that are relatively strong, BNB 50% from all-time high, are better than those with larger drawdown? Definitely. Yes. I mean, this is it. This is the momentum principle. This is the trends. You stick with what works well and you reject what works poorly, just like Julius the Campanaro said. You want to be long. This is what represents the momentum portfolio. You're long relative strength, relative uptrends, and you're short relative downtrends, right? So you have a benchmark against Bitcoin or against S&P 500. You're long whatever outperforms the benchmark, and you're short whatever underperforms the benchmark, because those will naturally tend to continue to preserve their phenomenon. I promised you one last thing, and outside of this free PDF again on the how to turn the absolute worst investing mistakes into profitable trading strategy in under 30 days that you can get free on thebirdness.com, right? Literally just go to thebirdness.com and you're going to get it for free, right? Then I'm here to let you know that I heard your voices, and we also have a Black Friday sale. And this is like a new situation. This is I've just launched along with my team an amazing offer for you guys, because if you appreciate the Congress so far, then you know that there is a lot of value in what we do, and there's a lot that we can help you with. And for the first time ever, I'm happy to announce again that we introduced something that we call 110% never lose guarantee. So basically what it means is that if you follow the program for 14 days, and if you sign up and become a member for 1 month, or for 4 months, or for a year, and we have Black Friday coupons and 10% off on top of it for crypto payments, then if you follow the program for 14 days and you don't get any successful call, you get zero result from us that could help you make your money, then I'm going to pay you $100, or I'm going to set you up for a free strategy session, which is way more valuable with my team, perhaps even with me, to figure out how we can improve the service for you. So for the first time ever, I'm taking all of the risk of your decision making on my shoulders. And for the first time ever, I'm saying that if you sign up with a monthly, 4-month, or yearly, with all those discounts, like 35% and 10% on top of that, this is 40% off. This is pretty cool, or even more. Okay. And then if you follow for 14 days and you don't get any successful result from us, then I'm going to give you cash back, $100 back, or I'm going to set you up for $371 worth of strategy session for free with me and my team to kind of like figure out how we can improve, how we can make sure that you improve your profitability rate. This is pretty insane. First time ever, something like that. So if you guys are ready, you can find the link on the video description for YouTube. If you go and find the link on the video description for the YouTube, you're going to find this direct link to take you to the exclusiveness club, where for one Starbucks coffee a day, basically cost of one Starbucks coffee a day, you're going to be able to get tons of insights, psychology training, all that to give you enough confidence, boost your trading character, improve your profitability rate, and show that trading can really be profitable. That's what we've been doing for 5 years. We've been accredited. I'm the only accredited technical analyst in my country from the CMT charter. This is truly magnificent an opportunity, and Black Friday, so I couldn't say no. I couldn't say no to the questions. I couldn't say no to the comments. So if you go again to thebourbonist.com and to claim your free PDF, you can also have a look and apply the special coupon. And the special coupon is, ladies and gentlemen, Black Burp 35. Let me put it for you into frames. Black Burp 35. So this is the coupon that gives you 30% off at the checkout. And if you go for it, like I said, and if you decide to not only apply 30%, 35% off, but you add the cryptocurrency payment and you pay in crypto, then we promote cryptocurrencies industry overall. And as our way to commit to crypto, to help crypto people, you can get additional 10% off on that. So you get 35% off and 10% off on top of it. But there's one point to it. You get also 3 bonuses. You also get 3 bonuses, everybody. Those bonuses is going to be Pro Trader Worksheet. This is going to be a special before your next trade checklist. And this is going to be something really cool. But you're going to see about that. 3 different bonuses coming if you sign up now. And I'm saying now because this offer ends in exactly, let me look at the clock, in 5 hours. Right? This ends in 5 hours, literally in 5 hours. And once it's gone, the bonuses are gone, the discount actually disappears. So all that everybody is for, again, for everybody who wants to learn. There are many packages, of course. So like I said, it's there's the lowest package for a month. That is the cheapest one. There's the 4-month package. There is the year package, right? You can go and apply all of those coupons at any time. 30%, 35% off, Black Burp 35. This is the coupon that you want to apply at the checkout and get a special discount. And this coupon is gone in 5 hours from the moment I'm going to finish this stream. Spraffer says, just bought the early today. Great saving. Congratulations. I think this is a great decision because, like I said, this coupon is not coming back. In 5 hours, it's going to disappear and not come back again. So that's my way, everybody, of appreciating your time. Again, I want to give back. So not only tons of pure alpha, not only free PDFs on how to actually improve your trading profitability in 30 days, not only free bonuses if you sign up now. This is like a fast action bonus, but you're also going to be able to apply 35% off at the checkout with Black Burp 35, as well as 10% off at the checkout. So guys, this is my point to end and to wrap the show, because you have only less than 5 hours left to actually go and proceed and make your decisions. So thank you for participating. God bless you all. Black Burp 35, thebourbonist.com exclusiveness club deal is yours. God bless you all. See you around. Bye-bye.